Howdy, everybody. Welcome to Liberty Call. I am Raymond Dahlman, your humble host here. And it is, what day is it? It is Tuesday, August 1st, 2023. Hope everybody's having a good day out there. A lot of red across the screen here for the markets on my charts that I have up. There was nothing but red all day long. I mean, the only thing, actually, oops, I brought up the wrong thing. Let me get over here. Yeah, I mean, the only thing that was green was the Dow and the VIX, and that is all that was green on my charts for today. So anyways, but like I said, hope everyone out there is having a good day. It's a little overcast here. We had some torrential rains here yesterday. Thank goodness my French drain's working perfectly next to my garage. Didn't get any water in the garage last night. Excellent. Not that it hurts anything. I hate having to sweep the water out, and I don't want it damaging anything long term. So anyway, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. Please give me some thumbs up, like, share, subscribes, follows, all that good stuff. And let's go ahead and jump into the news for today. The Dow Jones was up 0.2%, 71 points, closed at 35,630. S&P 500 was down 0.26%, closed at 4577. NASDAQ was down 0.43%, closed at 14,283. The VIX was up 2.2% today. It's at 1393. Canada was down 0.45. Brazil was down 0.66. And Mexico was down 1.08%. Over in Europe, a lot more red. Let's see, Germany down 1.26. The UK down 0.43. France down 1.22. Netherlands down 0.74%. Spain down 1.44%. Italy down 0.97%. Switzerland down 0.08%. So basically flat. So that's not too bad. Or I guess that was yesterday. Or that was, I guess they're not open today. Anyways. And Portugal was down 0.9%. Russian exchanges split today. The MOEX was up 0.2%. The RTSI down 0.16%. And the overnights in Asia, the Nikkei in Japan was up 0.79%. Australia up 0.54%. And the rest are red. New Zealand was down 0.44%. In China, the Shanghai was flat at down 0.02%. The Shenzhen Component down 0.36%. China 50 down 0.38%. DJ Shanghai down 0.12%. Hang Seng down 0.28%. And the Taiwan weighted down 0.85% for the day. So like I said, lots of red across the screens. My guess is people are trying to figure out which way the market's going to go. I mean, if you've been watching the TVs and the talking heads, they've probably been telling you, there's no recession. We're going to get a soft landing. Everything's going to be fine. Well, if you believe that, I got a bridge in Arizona I can sell you. Anyways, all right, let's hop on over to the market recap. S&P 500 stumbles, pressured by cruise stocks as earnings season heats up. All right. On Tuesday, the S&P 500 experienced a stumble as weakness in consumer stocks and mixed quarterly results from various companies weighed on investor sentiment. Falling cruise stocks played a significant role in the market's downturn. Norwegian Cruise Lines witnessed a sharp decline of 13% after its third quarter guidance fell short of estimates, overshadowing better than expected second quarter earnings. The company's projection of an adjusted earnings per share of 70 cents for the third quarter, below the estimate of 80 cents per share, raised concerns among investors about the demand for cruise services. This weaker guidance also had a spillover effect, weighing on other cruise stocks, including Carnival Corporation. In the healthcare sector, Pfizer reported mixed quarterly results with earnings surpassing estimates, but revenue falling short. The company also lowered its full-year revenue guidance, cautioning about, quote, near-term revenue challenges, end quote. On the other hand, Merck and Company impressed investors with a narrower loss and a second quarter revenue that exceeded analyst estimates. The positive performance was bolstered by strength in its cancer drug Keytruda. Well, Pfizer's probably having trouble because people aren't buying those clot shots anymore. I mean, they're killing more people than they're saving. So anyways, let's see here. Uber Technologies managed to shine despite missing analyst estimates for second quarter results. The company's shares rose more than 2% after its third quarter guidance overshadowed the earnings miss. Uber's management projected an adjusted EBITDA in the range of $975 million to $1.025 billion for the third quarter, surpassing Wall Street forecasts. The optimistic outlook prompted Wedbush to raise its price target on the stock, further supporting investor confidence. Amid the corporate earnings reports, the labor market showed signs of softening. The number of job openings in June declined more than expected to 9.58 million, down from 9.61 million in May. This indicated a potential easing in the labor demand, which is likely to be welcomed by the Federal Reserve. It adds support to the prevailing expectation that rate hikes are unlikely to be resumed anytime soon. Chairman Powell has said they're going to do one more. So if you're thinking he's not, I take him at his word. He's basically said he's going to do everything up to this point that he's done. The mixed performance in various sectors and the economic indicators have left investors cautious as they continue to assess the overall health of the economy, the cruise industry's concerns about demand, and the impact of Pfizer's revenue challenges have raised concerns about the sustainability of economic growth. On the other hand, Merck's strong performance and Uber's optimistic guidance have provided some positive momentum. The Federal Reserve's response to the softening labor market will be closely monitored by investors as it could influence future monetary policies and overall market sentiment. Yeah, those COVID drug people are probably suffering right now because you don't have the government paying for all these shots. And basically, it was free money for them. Anyways. All right, what's up next? Ooh, labor data. That's always exciting. U.S. labor openings hit more than a 2-year low. Labor market still tight. The latest job openings and labor turnover survey, the JOLTS report from the Labor Department, revealed a decline in U.S. job openings to the lowest level in over 2 years during June. Despite the decrease, the number of job openings remained consistent with tight labor market conditions, which could prompt the Federal Reserve to maintain its elevated interest rates for some time. The resilience of the labor market was evident as layoffs declined for the third consecutive month, and the number of job openings for every unemployed person increased from May to June. This indicates that employers are holding on to workers due to challenges in finding labor during the COVID-19 pandemic. While the tight labor market suggests strength, the report also signaled that workers may be growing less confident. Resignations saw a significant decline, the largest since April of 2020, indicating that workers are less inclined to switch jobs. This trend may lead to slower wage growth and ultimately have an impact on overall inflation. The overall inflation problem has to do more with the amount of money printing than it does the amount of people who work or what their wages are. All right, job openings decreased by 34,000 to 9.582 million in June, the lowest level since April of 21. The rate of job openings remained steady at 5.8%. The hiring rate fell to 3.8%, the lowest level since the first wave of the pandemic, with numbers of hires dropping to 5.905 million. Despite optimism in the labor market, manufacturing has been facing challenges due to higher borrowing costs. Factory activity seems to have stabilized at weaker levels in July, with the ISM manufacturing PMI rising slightly from June, but remaining below the 50 threshold, indicating contraction in the sector. Overall, the JOLTS report and ISM manufacturing survey point to a mixed economic outlook. While the labor market resilience is positive, the decline in job openings and hiring, along with the challenges in manufacturing, may influence the Federal Reserve's approach to monetary policy. The upcoming employment and inflation data will be crucial in determining the trajectory of the central bank's decisions in the current tightening cycle. So, again, keep in mind, the jobs numbers are a lagging indicator. They really don't tell you much moving forward. I mean, most of the time when the economy gets bumpy and rocky, the jobs numbers will look at their worst when the market is actually starting to go back up. But what do I know? I've only been doing this for like 15 plus years. All right, last up, it's an article from Mises Wire. It's titled, "What Will It Take for Cryptocurrencies to Become Full-Fledged Money?" And this is written by Thorsten Poliet. Sorry if I mispronounced your name there, buddy. All right. The concept of a crypto unit, that's in quotes, exemplified by Bitcoin 2, presents a revolutionary idea of money created in the free market, independent of state control. And that's always good because the state does nothing but screw stuff up. This cryptocurrency operates on blockchain technology, a decentralized and anonymous system allowing global transactions without interference from governments. If such a denationalized form of money were to become prevalent, it could have far-reaching consequences for the state and the existing of the fiat monetary system. The adoption of a cryptocurrency like Bitcoin 2 would significantly limit the state's ability to tax its citizens, since transactions and income would remain anonymous. The state would have to resort to taxing physical assets like property and land, but this process would be costly and challenging. Moreover, the state's ability to borrow money would be severely hampered, as creditors might be hesitant to lend to the state, leading to higher interest rates and reducing credit financing. The potential financial disempowerment of the state through cryptocurrencies raises questions about the state's viability and its ability to gather supporters behind it. The current appeal of political parties and ideologies that promise redistribution and wealth accumulation would lose attraction, as the state would lack the resources to fulfill such promises. Yeah, you wouldn't be able to promise, provide promises with my tax money for blue votes, and that's something that really irritates the hell out of me. However, a widespread adoption of Bitcoin 2 as a universally used means of payment is not without its challenges. The cryptocurrency's performance and transaction costs have fluctuated, and the blockchain technology may lack finality in transactions. Additionally, the need for intermediaries in certain situations could undermine the vision of a completely decentralized system. The transition from fiat currencies to cryptocurrency would have significant implications for the fiat monetary system and the production and employment structure as it is created. The appreciation of cryptocurrency against fiat currencies would lead to a decline in the purchasing power of fiat money, impacting investments and leading to economic repercussions. While technology may address some of the challenges, the state is likely to resist a free market for money to protect its control. A shift towards private law societies and free market for money would require a change in people's mindsets away from socialist collectivist ideas towards self-determination and acceptance of better ideas. In conclusion, the adoption of a crypto like Bitcoin 2 could revolutionize the monetary system, leading to a limited role for the state in finance and taxation. However, the realization of a free market for money would require significant changes in people's beliefs and an embrace of alternative ideologies focused on individual freedoms and private law societies. I 100% agree with everything that man said. It's articles linked in the show notes, so if you want to read it in its entirety, I would recommend it, and all the other articles on Mises Wire. They're really good stuff. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com, or you can go to the email address, send me an email right here and say, hey, I'd like a meeting. I want to be able to prepare for retirement or whatever things I want to do later on in my life. So, all right, like I said, that's everything I had. Hope everyone has a wonderful evening, and I will talk to you next time. Adios.